What's up guys, Alvaro here and welcome to the Bilingual Stock Market channel again. On this channel we talk about the markets and we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update. So I want to break down some technicals going over S&P 500 and the NASDAQ 100, but also breaking down from a technical standpoint 4 stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And today we had a red day all across the board. And guys, 10 a.m., 11 a.m., almost noon Eastern Standard Time, the markets were doing great. And suddenly after afternoon, we saw a big drop when it comes to the major indices. So the Russell 2000 went down today 0.56%, NASDAQ went down 0.64%, Dow Jones went down 0.72%, and the S&P 500 ended up going down 0.69%. And when it comes to the sectors that trade inside the S&P 500, we could make the case, guys, that we had a red day all across the board. The best, and I am quoting best, performing sector today was real estate, going up 0.15%. And the second best performing sector was materials, guys, but materials went up 0.01%. So we can make the case that materials pretty much broke even today. But other than those two sectors, the other 9 sectors ended up going down today. The financial sector went down 1% and the tech sector went down 0.56%. And take a look at this, guys. At 10:51 a.m. Eastern Standard Time, the financial sector was up 1%. And then after 10:51 a.m., as I just said, Eastern Standard Time, the financial sector started to go down and down and down and down. And the same thing happened with the tech sector. So let me check over here the tech sector. So the tech sector was up 0.69% at 10:32 a.m. So that's for the most part, guys, a reason why we had a red day today. So the most two important sectors started to sell off at around 11 a.m. Eastern Standard Time, and that was it, guys. We had a red day all across the board, and obviously the markets are waiting for the CPI data report that is coming out on Wednesday. That is going to be critical. I think that the direction that the markets are going to pick, at least during the month of October, is going to pretty much depend on whatever the CPI data report shows on Wednesday. The expectations are at around 0.30%. That's the increase, 0.3%. Let's put it that way, guys. On Wednesday, when it comes to inflation, basically here in the US. So anything below 0.3% is going to be a surprise in positive terms, and anything above 0.3% is going to be very, but very negative for tech growth and higher multiple stocks. And we can make the case that obviously if we happen to have a worse than expected inflation report, then the inflation trade is going to do pretty well. Materials, industrials, and financials. So that is going to be very critical, guys, on Wednesday, as I just said. And tomorrow we might have a sideways day. I don't think that we're going to see much action tomorrow because the markets are just waiting for the CPI data report. And on top of that, today the bond market was closed. So we didn't have the 10-year Treasury yield trading. So we didn't have today any bond market related trading. So it is going to be pretty much very interesting to see what the 10-year Treasury yield is going to do tomorrow, how the 10-year Treasury yield is going to perform tomorrow while we wait for the CPI data report that is coming out, as I just said, on Wednesday. And before going over the S&P 500 and the NASDAQ 100, I want to show you guys 2 trades that I closed today. I closed a trade on Pinduoduo, and on Friday I closed a trade that I broke down here on the channel on Fubo TV. So on Friday I purchased 70 shares of PDD at $95.08, paying $6,655, and today I sold out of these 70 shares at $98.79, and I was paid $6,915. I ended up making over here $260, and on Friday I closed in a successful way a trade that, as I just said, guys, I broke down here on the channel last week on Football TV. So I think that I purchased these shares on Wednesday. So no, way before that. On September 28th, I purchased 150 shares of Football at $24.16, paying $3,624, and I ended up selling out of these 150 shares on Friday, as I just said, being paid $3,813 when Football hit $25.42. So I ended up making, for the most part, something like $190. So these two trades were the ones that I was able to close on Friday and today as well. And now let's go ahead and take a look at the S&P 500, which, as I just said in the introduction of this video, went down today 0.69%, and it closed today's trading session at 4,361 points, or 43.61. So take a look at what happened today, guys. Let me pull up here the 1 day, 1 minute chart. And today, the time that I told you guys, somewhere between 10:26 a.m. and 11:44 a.m., we saw a double top formation, guys, but I mean a textbook double top formation on the 1 day, 1 minute. So the bulls of the S&P weren't able to take on 44.15, and after that, after the second test, we saw a massive drop of the S&P. And let me take a look over here. So we saw a drop of 1.22%. Jeez, guys. I mean, yeah, there is no any conviction to go higher in either the S&P 500 or the NASDAQ 100, because the markets are very worried about whatever the CPI data report is going to show on Wednesday. So in technical terms, this was a very ugly day for the bears, even though the S&P only went down 0.70%. Let's round that up. So in terms of support, guys, for tomorrow, the most important area, the first line of defense for the bulls, is going to be 43.58. 43.58 is a former area of overhead resistance in which the bulls of the S&P failed on 2 occasions back in early July. And if the bears are able to take on 43, that area, guys, 43.58, 43.60, then the next important area of support is going to be 43.27, which happens to be a former area of support that acted as such on 3 occasions also back in July. And in the case, so the most important task of the bears tomorrow is going to be taking on 43.58 and then taking on 43.27. And in the case of the bulls of the S&P, they need to take on 44.24. I have been saying this here on the channel left and right, guys. Take a look at how 44.23 coincides, is an area of overhead resistance that coincides with the 180 SMA on the 4-hour chart. So the second the bulls can close 2 consecutive trading sessions above 44.23, they are going to be changing the picture of the S&P 500. But as of now, and taking into account the price action that we saw today, we saw a clear win for the bears of the S&P 500 today. And when it comes to the NASDAQ 100, so the NDX saw pretty much the same situation that I just told you in the case of the S&P 500, the double top formation. So the NASDAQ 100 went down 0.72%, and it closed today's trading session at 14,713 points. So let me pull up here the 1 day, 1 minute chart, and we kind of saw a double top formation. I mean, this was a triple top formation for the most part. But case in point, the bulls of the NDX weren't able to burst above 14,900 points. And take a look at how, let me draw a line over here. Take a look at how the bulls also failed at 14,900 points on Friday. So we are talking about a very critical area of overhead resistance for the bulls of the NASDAQ 100. So the most important task, needless to say, guys, tomorrow for the bulls is going to be taking on 14,900 points. If they are able to take on that area of overhead resistance, then the next important area is going to be obviously 15,000 points. And take a look, guys, at how this 50 SMA on the 4-hour chart coincides with the area of overhead resistance in which the bulls of the NDX failed on Friday and also today. So 14,900 points is going to be extremely critical. And in the case of support, the bears did a very good job today, guys, because you know that 14,770 points is a very important area of support for the bulls. We are talking about a former area of support that acted as such back in mid-August, but it also acted as support back in late July. And this support was violated today into the closing bell. So very good job for the bears of the NDX. And the next task for the bears of the NDX is going to be bringing the NASDAQ 100 down to 14,400 points, which happens to be a spot in which they felt back on October 4th. So, yeah, guys, so this is just the truth of the matter. We had a day in which the bears gained steam and strength in both indices, in the NDX and the S&P 500, and the bulls need to make a push higher and reconquer critical areas of overhead resistance. And I don't think that they are going to be able to do it tomorrow, maybe on Wednesday, if we happen to have a better than expected CPI data report. And now let's go ahead and take a look at AMC Entertainment real quick for my apes out there. So AMC went up today, guys. It pretty much broke even. It went up 0.16% and it closed today's trading session at $37.25. So let me zoom in here. And the 4-hour chart, and guys, nothing has really changed. Let me show you here the 5-day, 5-minute chart. And take a look at how the bulls or the apes or whatever you prefer of AMC are really struggling at $38. So $38 was broken to the upside on Friday, and the bulls couldn't manage to hold $38 into the closing bell, and the same thing happened today. The apes were able to take on $38. They went up to $38.60 each, and then they couldn't manage to hold the lower support of $38 into the closing bell. So obviously, guys, the most important task for the good old apes of AMC is going to be reconquering $38 and maybe closing above $38 for 2 consecutive trading sessions. That is going to be very positive, and that is going to imply from a mental standpoint that we are starting to see a shift in momentum when it comes to AMC. So watch out tomorrow, guys. If you see AMC bursting above $38 and starting to consolidate slightly above $38, which happens to be a former area of overhead resistance that acted as such on 2 occasions back in August, but we are also talking about a former area of support back from early June, then that might be a sign that the apes of AMC are gathering momentum in order to fill the next gap up to $43. $43 is a former area of support that acted as such back in early September, but we are also talking about a former area of support that acted as such on 2 occasions back in June. So that's the most important task for the apes of AMC. So watch out for that move, guys, because if any of you or if any of us pick up some shares of AMC at $38 and we take a quick trade up to $43, we are looking at an 11% profit. That would be a very nice quick trade. And the second stock of this video is going to be good old Lucid Motors. And in the case of Lucid, guys, I was talking about Lucid with some friends of mine that are traders, just like me today. So the event that we saw in Arizona, like 2 weeks ago, that ended up being buy the rumor, sell the news. So long story short, Lucid is supposedly going to start to deliver its vehicles throughout October. So as of now, I mean, today is October 11, and so far I haven't heard anything about Lucid delivering vehicles. So I am going to knock wood, because I have told you guys plenty of times that I believe that this is going to be a let's say a legitimate competitor to Tesla. So I really want Lucid to start delivering vehicles. I think that is going to put some sort of positive pressure over Tesla that as of now has zero pressure over its shoulders, because Tesla is pretty much running a one single company race. They are extremely ahead of everyone else, and I think that Lucid is going to be a decent competitor. So if Lucid is actually going to start to deliver its vehicles throughout this month, so let's say that maybe we get some good news that Lucid started to deliver its vehicles, I don't know, like 10 days out, I think that is going to be a positive catalyst that might make Lucid run to the upside. So Lucid went down today 1.55%, and it closed today's trading session at $22.87. So guys, if tomorrow, and even though I know that that the technical chart of Lucid isn't the best looking chart, however, and since I just told you that I believe that we are probably having a very positive catalyst coming up in the case of Lucid, so I am going to keep a close watch on $21.25. $21.25 is a previous area of support that acted as such back in mid-August. It also acted as such back in mid-July, and lastly, it acted as lower support back in late March. And on top of that, we have the convergence, the coincidence of this 180 SMA on the 4-hour chart with a former area of support that, as I just told you, acted as such on 4 occasions. So if we happen to pick up shares of Lucid at $21.40 each, and if we write them up to the next important area of overhead resistance at $27.70, or let's say $28 for argument's sake, we could be taking a 23% profit trade, guys. This is no joke, no doubt about it. 23%. And take a look, guys, at how $28 has turned into a total nightmare for the bulls of Lucid. So the bulls of Lucid have failed at $28 on 1, 2, 3, and 4, and 5 occasions throughout the last, let's say, 4 months. Let's just put it that way. So I think that if we happen to have a very positive catalyst, by the way, I have a friend that lives in Canada that told me that Lucid is opening some sort of commercial shop or something like that, commercial studio, I think that they say, in Vancouver, in Canada. So I think that this company is about to get serious when it comes to manufacturing and delivering vehicles. And maybe if we happen to get a very positive catalyst, we might see Lucid finally bursting above $28. So in my case, guys, and even though, as I just said, this is not the best looking chart, I am going to be waiting for Lucid at $21.40, no doubt about it. And if we take a look at the relative strength index, it is at 33 points. It is already low, so we can make the case that if Lucid happens to pay a visit down to $21.40, the relative strength index of the stock of this company is going to be way lower, and that is going to increase the likelihood for the bulls of Lucid to find support at a previous area of lower support and then bounce back up. And the third stock of this video is going to be Sofi, and in the case of Sofi, we got very good news. And the stock of this company was upgraded by Morgan Stanley with a price target of $25. Let me see if I can see the news over here, because the report of Morgan Stanley was, there you go, it was very bullish, guys. So according to Morgan Stanley, Sofi is the fastest growth story in consumer finance. How about that, huh? I love it. I am a bull of the stock of this company. So Sofi went today on an absolute tear. It went up 13.45% and it closed today's trading session at $18.39. And once again, guys, we are getting very overheated. If we take a look at the relative strength index of Sofi, it is at 73 points. So the stock of this company is very overbooked. So I would like to see, guys, tomorrow some sort of retracement in the case of Sofi into a previous area of overhead resistance at $17.60. $17.16 is a previous area of overhead resistance in which the stock of this company already failed back in late September, also back in early August, and it also failed on 2 occasions between at that area, as I just said, $17.60. So Sofi failed on 2 occasions back in late April and also back in early May. So a pullback down to $16.60 is going to be very healthy. That is going to let the relative strength index of the stock of this company to cool off a bit. So, and we are talking obviously, guys, about a former area of overhead resistance that now should act as a new support. So if I happen to see Sofi paying a visit to that area, $17.60, and finding a good support over there, I am going to be probably picking up some shares in order to take a trade up to $19.63. $19.63 is a previous area of overhead resistance in which the bulls of Sofi failed on 2 occasions back in March. So, picking up some shares of Sofi at $17.63 and selling out of those shares at $19.53, we are looking at an 8% profit, nothing to sneeze at. So, watch out for Sofi paying a visit, retracing a bit. First of all, I'm paying a visit down to $17.68. And now the $1 million question is, can Sofi fill this next gap up to $19.60 with its relative strength index being at 73 points? It could happen, guys, but I don't think so. Take a look at what happened when Sofi hit $18. This was back on September 24th. So way back then, the relative strength index of Sofi got up to 79 points, and after that, we saw a drop. So Sofi couldn't fill this gap that I am telling you guys about with its relative strength index being high. So we can make the case that this shouldn't be this time shouldn't be the exception to the rule. And now let's go ahead and take a look at the last stock of this video, Didi. And this is Didi Global, correct? Yeah, there you go. So Didi went up today 2.57% and it closed today's trading session at $8.38. And it looks like, guys, it seems like the bottom might be in when it comes to Chinese stocks. So on one hand, last week we found out that Charlie Munger has been loading up on Baba. And on the other hand, we know that President Biden is going to hold a video conference with Xi Jinping, the president of China, anytime soon. So we might be seeing a shift in momentum when it comes to most of the Chinese stocks out there. So we might have a positive sign in order to take a trade with Didi Global. So Didi closed today's trading session at $8.38, as I just said. And guys, $8.36 or $8.30 each is an interesting spot that I am going to keep be keeping a close watch on tomorrow. $8.38 each is a former area of overhead resistance in which the bulls of Didi failed back on September 27, and they also failed back on September 24th. So now this is the 1 hour chart. So now I am going to pull up here the 4 hour chart. So if we happen to see a process of consolidation slightly above $8.38, that might be a sign that the bulls of Didi are gathering momentum in order to make a push higher. So if the bulls of Didi can make a push higher from $8.38 up to the next important area of overhead resistance at $10.73, we are looking at a 21% profit trade, nothing to sneeze at. And when it comes to the overhead resistance that I just told you about, near $10.73, we are talking about a former area of overhead resistance in which the bulls of Didi failed back on August 5th and also back on August 2nd. So watch out for Didi, guys. I think that if the stock of this company can hold as a new support a former area of overhead resistance at $8.31, we might see a push higher in order to fill the next gap up to $10.76. And with Didi Global, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours, sometimes 5 hours after the market closes, because we have to record, we have to film, guys, 2 different videos in 2 different languages. So this is very time consuming. We always try to post our videos as early as we can. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well. So you can pick your preferred language, but most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours, 5 hours after the market closes. Peace out.